Welcome to this training video on inter-entity transactions. My name's Anne from Orchid Systems, and today I'm going to run through the setup needed to automate loan account entries between entities. Inter-entity transactions allows you to automate loan account entries between entities. It works within one Sage 300 company database or across multiple Sage 300 company databases. The due to and due from transactions are automatically generated when the GL batches are posted. It works on all general ledger transactions, regardless of their origin, so therefore works across all the subledgers. And it balances the entity transactions at a GL segment level. And this is what I'll be covering in this training video. Inter-entity transactions also allows you to auto-create AP, AR, and/or GL reallocations. It automatically allows you to create these additional transactions to automate complex inter-entity transactions. And inter-entity transactions provides for cash management between companies. It allows you to allocate payments or receipts for invoices in one company using a bank account in another company. You can transfer invoices from one company to another company for consolidated processing. And you can process bank transfers between companies. There's also an AR and AP consolidated age trial balance. The triggers and the cash management is covered in a separate training video. Inter-entity transactions comes in two editions. Single company, which creates the balancing entries between entities in the same Sage 300 company. And you have multi-company, which creates balancing entries between entities both in the same company and across multiple Sage 300 companies. Entities are defined by a segment in the GL account. In order to run through the setup and configuration needed for inter-entity transactions, the first example I'm going to do is using the single company edition. We're going to record an AP invoice and allocate 50% of the invoice to two entities within the same Sage 300 company. The second example I'm going to run through is a multi-company example, when you're selecting the entity by choosing a GL account belonging to the entity. We're going to enter an AP invoice allocating 50% to entity 1, 30% to entity 2, and 20% to entity 3. And the final example that I'm going to run through is also for inter-entity multi-company, when you're selecting the entity by choosing an optional field. We're going to enter an AP invoice and allocate 22% to entity 1, 33% to entity 2, and the remainder to entity 3. This example shows advanced inter-entity transaction configuration. It is only required when you have many entities and many expense and revenue accounts, and you do not want to have all the target expense and revenue accounts in the source database. It allows you to define the target entity in an optional field. We're going to raise a $900 AP invoice in Orc Limited. $200 will be allocated to entity 1, $300 to entity 2, and $400 to entity 3. The original AP invoice entry will look like this. We will post the expenses to the same expense account belonging to entity 1, but we will select different optional field values to indicate which entity we want to send those particular amounts to. So we will select entity 2 for $300 and entity 3 for $400. When this batch posts in the GL, first inter-entity transactions will reverse the entity amounts belonging to target databases from the expense account belonging to entity 1 and put these values into the clearing account for entity 2 and entity 3. Then, inter-entity transactions will raise the due to and due from loan account entries between the different entities. So due to 1 in 2's books of $300 and due from 2 in 1's books of $300. And with respect to entity 3, we'll get due to 1 in 3's books of $400 and due from 3 in 1's books of $400. And then using the auto reversal functionality, inter-entity transactions will reverse out the transactions belonging to entity 2 and raise the debit to the expense account in Entity 2 in Orchid 2 and the credit to the loan account with Entity 1 in Entity 2. And similarly for Entity 3, the transactions will be reversed out of Orchid Limited and we will debit the expense for $400 in Orchid 3 and credit the loan account with Entity 1 in Orchid 3. For the automation of loan account entries, where we allocate to the target entities by choosing an optional field, the topics we're going to cover is activating the module, looking at the license file, and assigning the visual process flows for the setup and processing of inter-entity transactions. Then we're going to look at the configuration required, both in the GL and inter-entity. We're going to look at the requirements for configuring the entity optional field. In GL setup, we'll look at the segments, accounts, and source code setups that we need. In inter-entity setup, we'll look at the segments tag and processing tab for the options we need to select. We'll look at the IET routes, the entity database mappings, and the GL triggers that we need to set up. Then we'll post an AP invoice and post the GL batch to see the transactions that are generated. And we'll also show you how to check the GL posting journals and the IET inquiries, the audit inquiry for errors, and how to use the IET periodic processing to process errors. To get the install shield for inter-entity transactions, you go to Orchid Systems, log in, select the version you want, and then find the programs. All the additions of inter-entity transactions, single company, multi-company, and inter-entity trade are in the same install shield. So you download one install shield and the activation code will make more or less of the options available. After downloading, you would run the install shield and then go to activate the module within the required companies. All Orchid modules can be activated through admin services, data activation, and then selecting the module required. You only need to activate inter-entity transactions in those companies that will be the source of inter-entity transactions. And after activating, you should assign the visual process flows to the appropriate people as they make for easier setup and processing. And then you should check your license file. And as you can see, this installation is licensed for inter-entity multi-company and cash management. And accordingly, we have the following options available. Using the inter-entity loan account entries visual process flow, the top half refers to the setup of inter-entity transactions, and the bottom half refers to using inter-entity transactions. The first setup you need to consider is the GL segments, inter-entity balances, loan account entries via a segment in the GL. So you need to create an entity segment, in our case, segment 4, and it's recommended that you use this entity segment in closing. You need to create the segment values for your entities. In our case, we have entities 1 through 6, and we have specified the closing accounts for those entities. Then you need to create your general ledger accounts. If you are using entity substitution and using an optional field to specify the target database, then you only need to have the due to and due from loan account entries belonging to the other entities. So we have the due to and due from loan account entries for all the target databases, and we need the clearing accounts for the target databases. We also need source codes. Source codes for the inter-entity transactions, the automatic loan account entries to be created, for the reversals, for the target database entries, and for the entity substitutions. And we need these source types with each of the subledgers that are going to be involved in these transactions. You also need to consider the administrative services security and who has access to set up or view the setup for inter-entity transactions. In setting up inter-entity transactions where you choose the target entity via an optional field, these are the options that we need to set up. The first thing you need to do is create your optional field for entity, and the optional field should have the values of all the entities involved. And then depending on the subledgers that are involved in inter-entity transactions, you need to assign that optional field at the appropriate level. So in our case, we want to split the invoice details, the AP invoice details by optional field, and therefore we have attached the optional field to the invoice details. And we need to flow these optional fields through to the general ledger accounts that are involved. In GL optional field setup, I need to assign the entity optional field to the transaction details. In all my expense entries, I need to have this same optional field defined on the general ledger account. After doing the configuration in GL and for your optional fields, you can do the configuration for inter-entity transaction. In the Inter-Entity Options, on the Segments tab, we need to select our entity. In our case, it's Segment 4, and we've selected that as our entity segment. And you need to define the default entity segment value. The default entity segment value is only used in complex journals when there are multiple debits and multiple credits to multiple entities. Inter-entity would not be able to work out which loan accounts to use for the debit to Entity 6 of $250, what portion relates to Entity 7 and Entity 8. In this instance, all loan account entries will be calculated with respect to Entity 1, the default entity. And then on the Processing tab, we need to turn on inter-entity transactions. When you're using multi-database, you need to select Allow Inter-Database Processing, and this will allow transactions to go to other databases. When creating transactions in target databases, you can optionally create GL accounts when posting. Inter-entity will then decide if a new expense account or revenue account needs to be created in the target database. Perform auto reversal is typically turned on when you're doing multi-company processing. So in Entity 1, Orc Limited, for example, any transactions raised for Entity 2 will be reversed from Entity 1 and then pass through to Entity 2. If you have a different financial year end, then you can use the transaction date to determine the fiscal year end period in the target database. If this is not selected, then both the transaction date, fiscal year, and fiscal period will be passed into the target database. You typically only select this when companies have different financial year ends. Use home currency or functional currency. If you want to use this feature, inter-entity transactions will send the source currency to the target database and the exchange rate from the source transaction. But it assumes that the target database has the same functional or home currency as the source database has. If this is not selected, inter-entity transactions always sends the source currency to the target database, and the date will be used to determine the exchange rate to be used in translating to functional currency in the target database. The options Consolidate and Process in Detail refer to the way in which the loan account amounts are calculated. If you consider this journal, where we have multiple debits to Entity 1 of $100 and $400, and multiple credits to Entity 2 of $50 each, whether or not we select Use Consolidated Entity Processing or Process in Detail affects the number of loan account entries that are made. Without Use Consolidated Entity Processing or Process in Detail selected, inter-entity transactions will sum the debits and credits by entity. So we will get a net debit to Entity 1 of 500 and a net credit to Entity 2 of 100. And then the loan account entries will be raised based on this journal. So for the loan account between 1 and 2, we'll get a credit of $200 and a debit of $100. And similarly, for the loan account between 2 and 1, we get a debit of $200 and a credit of $100. If we select Consolidate, use Consolidated Entity Processing, Then inter-entity transactions will sum the journal by entity, giving us a net credit to entity 1 of $400, debit to entity 2 of $100, and a debit to entity 3. And the loan accounts will be raised in this way. If we select Process in Detail, then inter-entity transactions will do no consolidation at all, and it will raise loan account entries for each journal line. You would typically use Process in Detail if you want to preserve the original transaction journal descriptions, or if you have different currency exchange rates for multiple entities, debits and credits. You need to specify the source type to be used for the inter-entity loan account entries and the source type to be used for the reversal entries. And these two should not be the same value. And the final option, Delete Exported Journal on Error, relates to general ledger journals being created in target entities. If unable to create the general ledger batch, for example, accounts do not exist, do you want an empty batch to be left in the target company, or do you want inter-entity to delete the batch that it created? But in addition, for inter-entity substitutions, you need to turn on triggers and select your entity substitution source type. The source type will be used in transferring the expenses or revenue to the clearing account prior to sending them to the target databases. And you need to specify the optional field to be used to substitute your entity. The next setup that needs to be done is the inter-entity transaction routes. You need to define a route between all the valid trading pairs between the entities. So this route, for example, between entity 1 and entity 3, if a transaction debits or credits entity 1 and credits or debits entity 3, then this account will be used in the due from 3 in 1's books entry. This account will be used for the due to 3 in 1's books. And this account will be used in the due from 1 in 3's books, and this account will be used in the due to 1 in 3's books. You can either have two separate accounts for the asset and the liability, as we have here, if you want to show the asset and the liability separately on your trial balance. Alternatively, you can use the same account and use the balance or the sign of the account to know which way the loan account is at any point in time. You do not need to define a route between 1 and 3 and 3 and 1. You can either define it as 1 and 3 or 3 and 1, but you don't need two routes. So for example, here's our route between 1 and 3, and here's our route between 2 and 1, which is specified the other way. If required, you can have multiple multi-level routes. For example, if we had a debit to entity 2 and a credit to entity 3, because there's no direct trading relationship between entity 2 and 3, the balance will first be routed between the loan accounts between entity 2 and entity 1, and then from entity 1 to entity 3. And you can have as many levels as you need in this transaction routes. And you need to define all the routes. In our case, 1 and 3, 1 and 5, 2 and 1, 2 and 3, 4 and 1, 4 and 2, 4 and 3. And after defining the transaction routes, you then need to define the entity database mappings for all external databases. So entity 2 relates to ORCINC 2, entity 3 relates to ORCINC 3, and entity 4 relates to ORCINC 4. Because we don't have entity 5 in this list, we know entity 5 belongs in ORC Limited. And when creating entries in the target database, this is the source code that we're going to use. It's recommended that you use a different source type other than GLJE, because then you can use the source code reporting to extract inter-entity transactions only. But this source type should not be the same as the source type that you're using for the loan account entries, the reversals, or the trigger entries. inter-entity transactions always post to the target database in source currency. But if you do have the same home currency, you can transfer using home currency, select this to yes, and then not only will the source currency be transferred across, but the exchange rate and home currency will be transferred at the same time. If you're not using the same home currency or you don't select using home currency here, then only the source currency is transferred across, and the Common Services currency tables will be used to calculate the exchange rate and the home currency in the target database. And you also need to specify a user ID and a password to be used to create the GL batch in the target databases, and this user must have the rights to create transactions in the target database. For general ledger transactions, you can select the database as not an online database, in which case it will create an export batch in this particular file path. The export batch is created when the IET periodic processing is run, selecting the pending entries. And you can optionally select to order post in the target database if you want. And finally, we need to set up the trigger accounts. Here you need to specify which accounts are trigger accounts, and if any journals are posted to that account with an optional field value, then InterEntity knows to substitute the optional field with entity and then knows which entity and database the transaction belongs to. You can specify each individual account, or you can use masks and ranges. In this example, I'm saying any account starting with 6. So all the 6,000 expense range are trigger accounts. And if any posting is made to the GL with these trigger accounts, we're going to substitute the entity. And we only need to set up one example row. We're using entity 2 to do this. So we substitute the entity with, in this case, entity 2. We specify a clearing account which belongs to entity 2 for InterEntity to use to switch the amount from the source account to this clearing account, and then we specify what account to use in the target database. Because we've mapped both the source and the target account will be the same as the source account, but it will substitute for -1, it will substitute -2 or -3 or -4, depending on the optional field value. And you also need to turn on the account is substitutable and what optional field is the one to be used containing entity. For information on using the GL triggers to create additional GL reallocations, AP reallocations, AR reallocations, please see the GL triggers and cash management training video. Having done the setup we need for the automation of loan account entries using optional fields, we'll go ahead and post this particular invoice batch. As you can see, we are posting to the same Entity 1 expense account, but we specify the entity that we want to send the balance to by way of an optional field. So on the optional field tab, for the first row, we are allocating this amount to Entity 1. On the second row, we're allocating the amount to entity 2. And on the third row, we are allocating the amount to entity 3. But if you're using inter-entity transactions and using optional fields to specify target databases, you might find Extender useful, as you are able to include the optional field in the detail grid. So we could allocate and amend our optional fields at this level if we needed to. And going ahead and posting this transaction. As with allocation by accounts, inter-entity transactions works at the GL level. So nothing has changed in the way AP posts to the GL. And opening up the GL batch, we can see the original AP invoice entry. And on the optional fields, we can see that the optional fields are set. The first row going to entity 1, the second row going to entity 2, and the third row going to entity 3. And when we post in the general ledger, Inter-entity transactions raises the substitutions, RY loan account entries, and reversals in the source batch, and then opens the target databases to create the GL entries in each of the target databases. The first 4 rows were our original AP invoice entry, as we can see by the source code. The first thing Inter-entity does is reverse the substitution lines out of the original source account into the appropriate entity clearing account. Initially, the $300 for entity 2 and then the $400 for entity 3, using the substitution source type. Then using the inter-entity loan account source type, the loan account entries are raised between 1 and 2 for $300 and between 1 and 3 for $400. And then because we have reversals turned on, all the entries for target databases are reversed using the IR source type. And in the audit inquiry, we will see the batches that were created in the target databases. We can filter by using Control F on any column, and we can see for batch number 298, batch 233 in entity 2 was created and 252 in entity 3 was created. The transaction status is exported, no errors were encountered. If an error was occurred, we would see error here and the reason for the error. In entity 2, we find the batch with an in and out through the clearing account and then debit expense credit loan account with entity 1. And in entity 3, we find the same in and out of the clearing account, the debit to the expense, and the credit to the loan account with entity 1. There are 2 scenarios where inter-entity transactions will prevent the source batch from posting. The first is when there's a missing route, or the second is when it's unbalanced with respect to entity. And for trigger substitutions, it's when an account has been specified as a trigger account, but the optional field value does not exist. And posting such a batch, you will end up with an error batch, and the error reason will be provided in the GL posting journal. In the scenario where inter-entity can post the source batch, but has an error in creating entries in target entities, you will get an error message in the inter-entity audit trail. The reason for the failure will be in the inter-entity audit trail, and you can filter by clicking Control F on any column to find your appropriate batch. And as you can see, the entry for entity 3 was successfully created, but entity 2 failed because the fiscal year and period was locked in entity 2. Once the scenario has been corrected, you can go to the Enter Entity periodic processing and reprocess the audit trail. And the audit inquiry will be refreshed. The audit inquiry also shows the date and time the audit entry was first created and the date and time it was subsequently updated. And the final setup you have in inter-entity setup is linked accounts, where you can define the linked pairs. So the account 1011-2 in entity 2's book should match 2012-1 in entities 1's books, and so on. If you've filled in the linked accounts, then you can run the account balance inquiry screen and it will go across database and give you the balances in the specified currency. If everything is posted and there are no errors, then your linked accounts will be in balance. You can use Generate Inter-Entity Transactions to check the inter-entity transactions that we raised in the source batch prior to posting. But your batch needs to be ready to be posted. So if we had this batch and we wanted to check what inter-entity transactions would be raised in this batch, we could make this batch ready to post, and then use Inter-Entity Transactions, Generate Inter-Entity Entries. And then when we go back to the batch entry, we will see the substitution lines being raised to move the amounts from the original expense account to the clearing account. And then the loan account entries from Entity 1 to Entity 2 and from Entity 1 to Entity 3. And then, because Entity 2 and 3 are target databases, the reversal entries. But this batch is not posted, so there will be no entry in the audit trail and there'll be no target batches. Once this batch is posted, you'll get the entry in the audit trail and the target batches. But if I was to go ahead and post this batch now, because each entity is self-balancing, inter-entity transactions will not raise any more entries in this source batch. We have just seen the example and the setup required for multi-company allocation to entities using an entity optional field. In the GL, we saw we needed to create an entity segment and segment values, create and configure optional fields, create the accounts, the clearing accounts and due to and due from accounts for each entity, and create the source types for inter-entity transactions. In inter-entity setup, we needed to configure the entity segment, turn on inter-entity and configure the source types, create the routes between the entities, complete the entity database mappings, configure the GL triggers for the entity substitutions, and if using the linked accounts inquiry, we had to create the linked accounts. And then when posting GL batches, we need to check the GL posting journal errors and the IET audit inquiry for errors. Thank you for watching this training video on inter-entity transactions, the automation of loan account entries. For more information on inter-entity transactions and other training videos, please go to www.orchid.systems.